Back, Johnson Chukwu, the Chief Executive Officer at Cowry Asset Management, is joining me right now virtually. Welcome to you, Mr. Chukwu, and thank you for joining us.
Thank you for having me. Good morning.
Good morning. Now, let's continue from where we stopped last Friday because there were so many issues that we did not look at. But let me take it from this angle. At least we've gone for the weekend, we're back. Which business or economic headline have you seen since we last spoke that is making you scratch your head? There's no hair on your head though, but that's making you scratch your head like this, you know. Which one of them?
Nothing
Or
major
was
has
it...
happened between Friday and
Okay.
now. The issues remain. Issue of assessing about $6.3 billion by the federal government, issues of investing in the refineries. They're the basic issues we've seen in the past couple of days. But the reality is that those issues are still as pressing as they were last week. Probably by the time the week for properly opens, we may need to face new challenges. But in the past 1 week, the issues still remain. Issue of managing the economy, issue of GDP growth rates, high inflation rate, high unemployment rate, some of those basic factors we discussed last week.
You know, for me, I don't know. Sometimes it's heartbreaking that you continue to talk about these issues year in, year out, year in, year out, year in, year out. Little change or no change at all. Or if it's going to be a change, it's going to be a drastic change for worse, you know, economically. But let's take it from this point. I know we talked about the issue of the NNPC or federal government approving to buy minority stake in Dangote refinery, 20%. We also talked about the issue of money approved for Kaduna and Warri refineries. We've talked about that. We did that last Friday. In case you're a new viewer or you didn't see that show, please, I'm sending you guys to YouTube, our YouTube channel. Go check it out. But let's talk about, I don't know if we talked about the $6.2 billion Eurobond. Mr. Chukwu, can you remember? Did I ask you that? Borrowing?
I think we must
we talked about
I mentioned that in passing, but
yeah.
It wasn't a subject of our discussion.
Okay, so you can go ahead with
that. We didn't dwell on it extensively.
Yes, go ahead with that. $6.2 billion Eurobond. Transaction advisors have been approved. I guess you know some of them. They are some of your colleagues, both international advisors. What do you think about this? And how do you see, what do you think the spot rate will look like?
Okay, if you recall what I said last week, I said that today we are on about $33 billion in foreign currency debts. Or total national foreign currency is about $3 billion. By the time we add another $6 billion, we'll be approaching $40 billion by the time by the close of this year. And our total national debt in dollar terms is about $87 billion, or about 33.1 trillion naira. So this amount we want to assess will be added up about 2.5 trillion naira into the 33 trillion naira. So we'll be approaching something like 36 trillion naira in national debt. And I also mentioned that as it stands today, our debt service is approaching 80% of the total federal government revenue. But the issue is not just assessing Eurobond. Borrowing is important, or nobody can reject borrowing or complain about borrowing. The borrowing is channeled towards investment in productive assets so that the investment will ultimately pay back the loans. The concerns have always been that we're not borrowing to meet recurrent expenditure. We are borrowing basically for consumption purposes, and therefore we are not investing that in borrowing or that debt into assets, into fiscal assets or productive assets that will ultimately lead to expansion in our economic activities and then subsequently lead to the capacity of the country to pay back those loans. That's the core of the problem. It's not just that, I can't complain that government is borrowing. Government situation is actually very there. They need to access funding from any source to meet the basic running costs of the government. But the challenge is, are we going to continue with the current obtuse structure of the Nigeria's fiscal framework so that we continue to borrow to meet recurrent expenditure? I have no objection to borrowing, accessing the Eurobond market because it's actually critical for the survival of the country. But we need to also do the heavy lifting, the restructuring that the economy requires, so that we don't keep going back to lenders to borrow, because at the current revenue profile, we are going to soon find it difficult to pay interest on those loans.
Okay, let's talk about the SDR. The Board of Governors of the IMF approved $650 billion special drawing rights for its member countries. Nigeria will be able to draw, I think, about $3.3 billion. And if we take a look at the SDR rights, we have currencies in that's the US dollar, the pound, the euro, the yen, and the yuan. The yen and the yuan are about 8% of the SDR. The dollar contributes close to 42%, and the rest of it to British pound and the euro. Where I'm going to specifically is that what do you think will be the impact of this SDR, especially to our buffers? Nigeria's FX reserves is at around $33 billion now. What do you think will be the impact of this SDR when it is drawn?
Well, the SDR will increase our effectively foreign reserve, in the sense that we can further draw down on that SDR to meet our payment obligations, particularly our trade balance of payment obligations. What that means is that you're going to have some relief to the reserve that we have today, because as we know, until recently, we have been accumulating negative balance of trade. So, and that balance of trade were being paid from drawings from our reserve. So with the increased special drawing right that the IMF has actually availed us and availed other countries, the country will be in a better position to meet foreign currency payment obligations as it relates to trade and other invisible trade. So you're going to have some relief, which to some extent will help us stabilize the exchange rate and possibly see to some appreciation of the exchange rate. But of course, we know when you are drawing in a line, or when you are borrowing, drawing on a borrowed line, you should know that it is not a permanent flow. The permanent flow will only come when you improve your export earnings and you have natural capital importation that is coming from your export earnings. So, so we shouldn't be so excited as to forget the fact that this is just a temporary relief. If we continue in the glutton consumption pattern, we're going to run down or exhaust the special drawing right that has been increased. And remember, this will also have to be paid back at some point in time. And then even the Eurobond we want to access will also be drawn down. So for me, while we are getting this relief, we should focus on the core issue of a restructured economy, on the core issue of building an economy that is productive, so that we begin to export more commodities, or at the minimum, produce a reasonable number of commodities that we can consume locally.
What do you think that this will do for the naira? Would it give the naira some kind of support? You know, this $3.3 billion that we're going to be expecting, will it give it some kind of support?
Yes, absolutely. Like I said earlier, it's going to increase your foreign reserve. And then an increase in your foreign reserve will mean that you have a stronger headroom. You have improved capacity to meet payment obligations. So that should naturally expect, we should naturally expect that naira should stabilize at the minimum and possibly appreciate if that is a policy intention of the central bank. But I doubt it that will be policy intention of the central bank to appreciate the currency, local currency, because that will put further pressure or bring back pressure. But for me, if you have an increase in your reserve or this special drawing right that the IMF has availed us, it boosts our foreign reserve and therefore improves the capacity of the central bank to defend the currency. I should expect that will also give foreign portfolio investors and other people who are bringing capital into the economy some level of confidence to know that they can access their funding if they want to repatriate their funds. And such should lead to stronger flow if we address other issues that are mitigating against capital importation into the country.
Mr. Chukwu, I just really want to ask this question, and the SDR allocation from the IMF, $3.3 billion, will it in any way filter into the purchasing power of Nigerians? Because I did ask, will it support the naira? And I did not ask that question for the CBN, because I know that when the money comes, it will definitely support and it will, you know, strengthen the buffer. But I'm saying as Nigerians, as you and me, will it really support, you're smiling because you know where I'm going to, will it really support, you know, the purchasing power, the strength of the currency in my pocket Will it reduce inflation? That's where I'm going to. So why should an
It may,
ordinary Nigerian really be,
okay,
be disturbed or
yeah, it could
be
reduce inflation,
concerned?
but let me start from the
Yeah.
core of what will happen. When the money comes in or when it's availed and it leads to stabilization of the exchange rate, it will not, there won't be any movement in your purchasing power or your standard of living. But if it leads to an appreciation of the local currency, it then means you're going to spend less of naira to buy more of foreign goods or to consume more of foreign goods. That means that your standard of living will improve, your purchasing power has improved because your local currency now commands a higher quantity of foreign goods and services. Similarly, if we see that happen, if we see that the price of imported goods have declined, it could now trickle down into your inflationary rate. Of course, the inflationary, there's a foreign currency component of inflation. So if you see an appreciation of local currency, which means goods and services imported into the country will land at a lower naira value, then you could actually see a drop in inflation. So you could have the multiple effect of one, leading to appreciation of the currency and also leading to an improvement or decline in inflation rates. Both or either of them or both of them will contribute, will lead to an improvement in the standard of living, will lead to an improvement in your purchasing power. And once you have an improvement in your purchasing power, you should talk of an improvement in your standard of living because you are able to consume more goods and services with the same level of income you have.
Thank you, Mr. Chukwu, for giving us that economics 101 or 202. I don't know which it is now, because I really needed to ask that question and the impact and why Nigerians perhaps should be concerned and take a look at that headline much more seriously. Let us talk about the spread of the COVID-19 Delta variant. Is it going to be complicating our economic outlook, really? Because we're seeing cases rise in Lagos, in Abuja. How complicated is this COVID-19, the Delta variant? How is it going to complicate the Nigerian economy, especially a Nigerian economy that is out of recession, that is crawling at a very snail speed? How do you think this would really impact the economy moving forward? That's the A part of the question. The B part of the question is the pandemic policy responses that we've seen from the government, at least in the last 1 year or so. Do you see that continuing as a result of the ugly head of Delta variant coming out right now?
Okay, let's start from how it will affect the economy or how it will affect the Nigerian economy, the increase in the wave of Delta variant of COVID. What I think will happen is that we'll see a decline, as I'm sure you saw a blip in the price of crude below $70. So if it leads to a slowdown in productive activities globally, then you will actually see a decline in demand for input materials, including commodities. That will affect our foreign exchange earnings and that will have a direct impact on our economy. But at the local level, if we have a larger level of infection or more pervasive infection of COVID-19, for the firm or the household, you're going to see situations where people will fall sick, their medical expenses will skyrocket, organizations will see their staff members declaring not coming to work, and therefore that will slow down productivity in most organizations or in many organizations. Again, you have to deal with the high issue, the high cost of medical expenses that companies and households will have to bear. I don't know if it could lead to a lockdown in the economy or some segments of the economy, particularly those segments that could be catalysts for the spread of this infection. So if you have things like social clubs, and I know the government locked down the social clubs, event centers in the past, but I'm not sure that they are enforcing that. But assuming they are enforcing that, you will see some level of contraction in the economy because the night economy in places like Lagos, Abuja, Port Harcourt, Owerri, and what have you will shut down, and that will lead to one, loss of jobs in the sense that there are people who provide services to those entertainment centers, and their income level will decline. So you could actually see an increase in level of unemployment, slowdown in economic activities, and further slowdown in GDP if we have a more pervasive infection of the Delta variant. Then on the aspect of the response of our government, I think the response has been very sluggish, and I mean very, very sluggish. Today, I'm not aware that the government of the Federal Republic of Nigeria has spent 1 kobo or 1 dime or whatever currency you want to call it on importation of COVID vaccines. We have been dependent on donations, handouts from this one, COVAX, the Moderna were expected to come from the US government through COVAX. The previous one we got was from COVAX. And then other countries have been engaged in ensuring that citizens are vaccinated. Countries like the United Kingdom has almost vaccinated more than 65% of their population. They approach 70%. The US is talking of vaccinating almost all the adults on anybody who is willing to be vaccinated. So, but in Nigerian case, Nigerian government is turning its shade that we vaccinated we got 3 million AstraZeneca, which has run out. And then we're expecting Moderna, we've gotten Moderna about 4 million out of a population of 206 million, of which that population, more than 100 million, will require this vaccine. And we're talking of 4 million. We vaccinated about 3 million people, and we're expecting to start vaccinating another 4 million. I think we've been very, very sluggish with our response. That is unbecoming of a serious country. And I think the government should issue as a clarion call for the government. The COVID, it's already known that those who have taken this vaccine are not likely going to suffer severe illness in case they get infected. That's the minimum the government has to do to provide some level of protection to their citizens. I don't think we've done that as a government.
Okay, let's use the remaining 2 minutes or so to talk about the resident doctor strike, because you can't be fighting a pandemic and for a country that is very serious with health or human capital, which health is one, health, education, and your doctors are on strike. The resident doctors make up 40% of Nigeria's healthcare or medical doctors workforce. We have about 16,000 resident doctors in the country out of 40,000 medical doctors that we have. Many of our medical personnel just jettisoned to Canada now. Canada is the new wave. That's where everyone is going to now, the UK, Canada, and the United States. The no work, no pay rule by the government, nothing yet been said. What do you think is the economic costs of this? And even beyond the economic cost, the human cost to this in a pandemic time, in a crisis situation. And everybody is just, sleeping, waking up, those that are leading us, and they're okay. Is the president back from London? He went there for his medicals. So, what do you have to say, Mr. Chukwu, and we end there?
Okay, let me say this. Let's start with the human cost, and it's going to be monumental. I mean, one of the stations showed the National Hospital in Abuja, I think on Saturday or Sunday, and it was virtually deserted apart from few consultants who were attending to only emergency cases. So you're going to see avoidable deaths. Unfortunately, Nigeria has gotten to a point where we really don't hold human life sacrosanct. But you're going to see a lot more avoidable deaths. I've actually suffered this case where I lost a cousin because of medical strike at FMC Mwahia because they couldn't transfuse him. They couldn't access the blood from the blood bank. But that's what we're going to see multiple cases of that. Unfortunately, we don't take, like I said, we don't take this seriously. Let me mention to you when you talk of economic cost. We must realize as a people that when the economy fails, several facets of the society will fail.
Yeah.
Our economy has failed, and therefore government is not unable to meet its commitment to the National Association of Resident Doctors.
Okay.
If we have a buoyant economy, the government may have made that. If you recall, not long ago, we came out of a strike by academic staff in our universities.
Mr. Chukwu.
Then next followed by the non-academic staff of universities. And you see this almost on a daily basis. One group or another is going on strike because their condition of living has deteriorated. The government can't meet its obligations to the critical sectors of the economy because our economy has collapsed.
We need to leave it at that.
So we need to
I think we need to leave it at where you ended, that the economy has failed and it has collapsed. We'll continue on a later date. Of course, the government will say it has not collapsed, it has not failed. We're still a work in progress. But many thanks for joining us today on the program today. Thank you very much, and I wish you a lovely week. All right. I've been speaking with Johnson Chukwu, who is the Chief Executive Officer at Cowry Asset Management. We've been talking about the burning economic headlines. Thank you all for joining us again today. Be the best you can be the change you want to see. Don't forget to join us on all our social media handles. you watching right now, click on the YouTube icon, Moneyline with Nancy TV. You can also find me on Instagram at Nancy Lu. I'll see you all tomorrow, God willing. Bye now.